Welcome to this week's market drama. We'll begin with oil, which fell 1.7% for the week. It is now down 7.5% for the year to $74 a barrel. Lower oil prices means lower gasoline prices eventually, which is good for the consumer. It's also deflationary, which is good for stocks in this type of current environment, right, where the market's trading on lower inflation means good. When it comes to stocks, S&P 500 was up 0.8% for the week. It was up 9% for November, which makes it one of the strongest months in over 3 decades, right? Really strong performance for stocks, but also for bonds. S&P 500 was up 12% so far since the October 27 low that we had seen. And if you recall why the market was selling off in August, September, October, was rising treasury yields, right? Rising bond yields. Why was bond yields going up? It was a concern around inflation. So this week, we had core CPE data come in, which was better than expected. It rose 0.2% month over month in October. This brought the year over year down to 3.5%. Which is still well above the 2 to 3% range that the Fed is looking for, but you continue to see it coming down, right? Which was another, call it data point, another dot, right, for the market to point to the story of inflation's coming down, this thing's real, which is good for stocks. And as a result of all this, also, the 10-year Treasury yield, if you look at now, October versus today, right around when the stock market saw a low was when the 10-year Treasury yield was at its highest, right? Around close to 5%. Since then, the 10-year Treasury yield is now down to 4.3%, right? So it does kind of validate that this was a big driver for the markets, was higher Treasury yields, bad for stocks. It signaled higher inflation. Treasury yields have come down. Inflation data points to deceleration of inflationary numbers. That's good for stocks, which is why we're now near all-time highs for stocks, is essentially for the S&P 500 at 2023 highs. So that's a little bit of what drove the action this past week, what has driven the action the last month in November. When you look at going forward, we do have this coming week, November unemployment rate numbers. We are always going to care about employment. It either solidifies this kind of soft landing, right? The economy is not going to go into a recession, but inflation is coming down, or it could show that employment picture is becoming weaker and weaker, right? So something to keep an eye on for next week. That's it for this week, and look forward to chatting next week. Bye.